Good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, September 20th. We are just getting the release of housing starts here in the United States. Survey says a little bit weaker than expected month on month, coming in sub expectations, negative 5.8%. We were looking for a print of negative 1.7. Building permits also falling short of expectations here, contracting by 0.4%. Missing that 1.8% clip. Also note that we did get downward revisions actually to the previous month as well, specifically in building permits here. So not the strongest read certainly for the housing market in the U.S., but to be honest, guys, not much is going to interrupt the market's attention over the next 24 hours as we head into the highly anticipated FOMC policy decision. So good morning to everyone here in the room. Eileen, good morning to you. Adam, always great to see you. Graham, Ferris, D, Dan, Steve, Rich. It's a pleasure to be with you. So we are systematically, as I noted yesterday, we're systematically going through all the dollar crosses. So D, I see your question. Good morning. Can we look at sterling, Kiwi, euro? Is that what I'm picking up? And euro dollar. We definitely have all those on tap. Euro Kiwi, I don't necessarily have a position on, but we can see what's going on there. But certainly all the dollar crosses will be in focus. So keep in mind that let me take a step back. Heading into tomorrow, guys, tomorrow morning's webinar, we will go into the Fed projections from last month, or last quarter rather. We'll see the dot plot. We'll go into a little bit more detail on what the central tendencies have been, so we can set up the expectation for the 2 p.m. release. Now at 2 p.m., you're going to get slapped with the policy statement and the projections. So all the information is essentially disseminated right at 2 p.m. and then at 2:30, is the press conference with Janet Yellen. Certainly that Q&A section at the end is really where sometimes we get some more meat on the bones. So that's sort of the outline for tomorrow. Again, tomorrow's webinar will go over all that stuff. But for today, we're still going to focus on price action and what's been going on with some of these dollar crosses. Also keep in mind, heading into the end of today's session in New York, things are likely to get really thin as far as market participation. So just keep that in mind. Okay, you got the BOJ, which is on tap later tonight. Kuroda, is expected to speak at 2:30 a.m. here in New York. So plan accordingly. We should be getting the policy release sometime before that. The Bank of Japan does not dictate a specific date and time, or a specific time rather, for the release. But we do know that usually it comes out before his comments, which is scheduled for 2:30. As far as the BOJ is concerned, you know, we'll go over dollar yen. It's in a very interesting and precarious spot, but certainly, you know, one of the main things that we have to keep in mind is that there's going to be there's a high probability that the BOJ is not going to look to do anything ahead of the Fed, and specifically ahead of the elections, which is, you know, less than 50 days away. Last time we heard Kuroda speak, he said that he was tasking, you know, a comprehensive assessment of the economy, and basically what the markets will be looking for overnight is what does that assessment look like? Is it more, well, if these conditions happen, we have these tools, and that's, I think, what the market wants to see, that the BOJ is prepped and has additional measures at hand. Keep in mind, they're almost, you know, a couple of months or a year or so, I think was the call, they'll own 100% of the ETF market. So certainly the BOJ is between a rock and a hard place. So you know, tonight's release, again, should be something that could shake up some of the yen crosses. So I do want to take a look at dollar yen. We'll take a look at Aussie yen, Kiwi yen, and pound yen, 131 specifically on pound yen being an area of importance I'm looking at. Yesterday we went over some of the other dollar crosses with regards to sterling dollar, Kiwi dollar, and dollar yen. And again, all the dollar crosses are on the table. So guys, feel free to throw out any questions, trade setups you'd like to review as we jump right into the charts. Okay, so here's what the dollar index looks like heading into the U.S. Open. Again, relative performance actually has Kiwi as top performer so far in the session, up 0.82%. Biggest loser is the sterling, 0.48% to the downside. Still looking a little bit deeper in the pound. You know, I do like a support structure that's coming up just a little bit lower, where I think we could find a little bit more of a support, a little bit of a rebound play. But keep that in mind. We'll take a look at that. CAD has not really been doing much. Euro has not been doing much either. Yen is basically unchanged on the session. So we'll take a look at those pairs as they get quiet here heading into the FOMC. Really quick, here's what Fed Fund futures are pricing in. You're still pretty steady with that December read at 57% or 58% probability here. This month's, tomorrow's release, still looking only about 24% chance that we'll see the Fed move on rates. All right, let's jump right in. So, for the dollar index, no change. Initial resistance at the 200-day moving average is basically the high that we made so far today. Key resistance still 12,014, 12,019. This Fibonacci confluence of the 618 retracement and the 100% extension. And the focus so far to start off the week is actually a really nice weekly opening range that's taken shape just above this near-term support. And again, you have the monthly, weekly, and fib confluences into that 1219 region. So really clean sort of weekly opening range taking shape for the dollar index heading into the FOMC. Remember, risk still remains weighted to the downside below this key region. All right, so we'll take another look at this tomorrow, but there's really no changes to any of the levels. I don't want to spend too much time here on the dollar index. Any questions? That was number one. Conwall says, hello, great to see you. Horace says, love the sterling dollar trade. Yeah, it's been pretty fruitful. Actually, for those of you who were in the webinar yesterday, reminder, everyone in the room, on Mondays we do a public webinar on Daily FX, so always keep that in mind. But yesterday we did discuss the sterling, and there was a really nice entry, Horace. I don't know if you were in the webinar. I think I saw you yesterday, right? That I noted, and right into the U.S. Open, sterling rallied right into that region, and there was a really mean reversion right off it. So it actually panned out pretty nice. I guess we could just jump into the pound first off. Here's what the pound looked like last night on last night's update, and here's what the pound looks like now. Okay, so the region of interest for me for possible support is the 2016 low day close that comes in at 29.26 on a near-term slope. There's also just basic slope support that comes in close to that region as well. So it'd be certainly a nice area of which you could find some support here on a sterling rebound. Here's what it looks like now on the hourly chart. So as we were doing yesterday's webinar, we were talking about this region here. 618 retracement. This is a broader retracement from the advance off of the lows that you made for August. Really nice pivot in price. Right, catching some highs here. That former slope support also converged there right into the U.S. Open, rallied right into that region and reversed. So I got out a little early here ahead of the U.S. close, but I did take the 30 pip ATR, and here we go a little bit lower. That low day close for the year is just lower, currently trading at 29.66, 29.26 would be a level of importance I'm personally looking at. And again, just that slope there gives us a little bit more of a time zone, maybe later into tonight's trade into the Asia Open. But that's sort of an area of which I'd start to look for some support. Now, one thing I do want to note, a lot of people might be thinking, well, Mike, doesn't this look like an objective break of just the weekly opening range? Yes, it does. But the one thing that you want to keep in mind is that it's still Tuesday, and when we're heading into major event risk, such as the FOMC, I don't necessarily want to hold myself too shackled by the opening range. So yes, this is a break below the weekly open. Yes, it's a break below the initial weekly opening range, below the 30 handle. I get it. Keeps the downside focus immediate, but again, structural support coming up at the low day close may offer a near-term rebound in price. Okay? Wouldn't start buying it here. Remember, trading the turns. Let it dip into that region, and if we get the rebound, look for the pullback to offer an entry against the low. Because as it is right now, we're in oversold condition. Remember, as long as the momentum signature is sub that 30 level, that's the propensity for the market to see the steepest drop. So I don't necessarily want to fight this here, but I am looking for some exhaustion a little bit lower down. Roy says, never got the link to yesterday's webinar. Roy, it's tweeted. I tweeted on both my handle and then also on SB Trade Desk. So just keep your eye on the Twitter handle. You should definitely see it come through. And also, give me a follow as well. I tweet that right off my own personal handle as well, MB4X. Horace says sub 30 on the daily or hourly. Is that a question, Horace, or are you saying? So the daily is not sub 30 yet, right? The hourly is sub 30 right now on momentum. So I'm hesitant to fight it. Now, the one thing you want to note is that if we do see a sort of a rebound here in U.S. trade, that would be divergence, price action making a lower low, the oscillator making a higher low. But when divergence happens below 30 or above 70, those are your weakest divergence signals. So some fruit for thought there. Bottom line, looking a little bit lower here for possible support in sterling. Horace, did I answer your question? Any other questions here on the British pound? So Horace, yeah, I think on the hourly, I think is what you're at. He says it's a question. Yeah, so on the hourly, when we're below 30, I'm very hesitant to try to buy it. It's the breakback above 30. And remember, when we're looking at any oscillator, it's all about the close of the candle. So if the candle closes and we're back above 30, that in and of itself is a near-term buy. But as long as we're below 30, and again, don't take my word for it, Horace. Let's look. Here's the last time we broke 30, right? The entire time we were below 30, the market was tanking. Here's another break below 30. Break until we broke back above 30 on the upside. That's when the market started to recover. So this entire time, there's a misconception of people saying, oh, it's an overbought condition, we got to sell. Oh, it's an oversold, we got to buy. It's just not that simple, because when it's in oversold condition, that means the market has that much push. It's the steepest, hardest push into the lows. So I'm not going to try to fade that just because markets are in oversold. It could stay in oversold for a day, a week, a year. It can stay in this condition indefinitely. It's the reversal and change of that condition from oversold that turns it into a little bit of a rebound trade. All right, he says, thanks, you're more than welcome. A break of 128.70 will mean lower lows again? Here's the deal with that, D. Good question. I do think so, yeah. Well, let me take a caveat back. Here's the daily chart, D, that we've been following for a while now. And basically the only thing I want to highlight, let me bring this into a weekly, are these trend lines right here. Okay, so first of all, I'll bring your attention to this longer dated slope support. This is from the 1985 lows. We almost came into that, but rebounded earlier of it post-Brexit. Here are just some slope lines that we were working from the highs that we made back in 2009. You can see some really nice pivot points off that, and it caught the lows that we made this year. So if we break, 27, well, I think you're talking about this level here, 28.70. Yeah, I'd expect to see some further lows, but not necessarily fresh lows. You still have this region here to deal with. The low that we made earlier in the year was actually the exact 786 retracement, long dated retracement. This is from the advance off the lows that you made in 1985, literally. So you still have that to deal with. Then you have those slopes to deal with. Okay, so just because we break that level, I don't want to necessarily take a perma bear call, but yeah, I would expect to see a drop into at least this zone if we make it beyond the lows from last month. D, does that make sense? Says yes, thanks. All right, cool. So sort of something like this if we do see the breakdown continue. Major resistance near term or initial resistance, let me rectify that, would be right at the monthly open. Okay, the monthly open comes in at 31.37 with bearish invalidation up here. Okay, if we clear these median lines again, former lower median line support and the 50% retracement, I think 32.20, 32.80, this region here would sort of be the breakout contingent for sterling dollar. Okay. Any questions on British pound? All right, that was number 2. Let me segue real quick into, okay, well, let me just finish these dollar crosses and then we'll jump into some of the yen stuff before today's BOJ decision. Last night we also talked about dollar yen. Here's what the dollar yen setup looks like. Y'all know my personal expectations with dollar yen. It's still a messy trade right now in my mind, but there is a very strong interest, where's dollar yen, in the long side, not only from retail speculative sentiment guys, but also from bank research. You know, I sit next to David Song on the desk here on Daily FX, and you know, constantly hearing him read off bank research, and we have all these tools that we can read, and all of these central, larger institution bank research notes are all getting super excited about a long dollar yen position. And when you sort of couple that with what you're seeing in retail sentiment, again, if you look at SSI, it's almost 3-1 now, okay, tilted to the long side. So long story short, it's kind of concerning. I would expect to see, or ideal scenario, let me just say that, if you put a gun to my head and say, Mike, what's the ideal scenario? I would say this thing would wash out, you know, back into like 100, 123. The August low day close comes in at 129, and then rip face. Again, that's just like sort of a dream scenario. As it stands right now, the formation that we're looking at, the levels we're looking at haven't changed since last week. We're still holding within the confines of this ascending median line formation off the lows from last month. Adjust that a little bit. Okay, you saw the lower parallel catch a really nice move here, almost catching that low exactly before ripping face to the upside. Here's that 618 line we were sitting at yesterday. Again, a brief dip below, saw a rebound here today, holding a real tight range. Long and short of the story is this. If the BOJ comes out tonight and you get a spike low into structural support, I'd be looking to buy the pullback. If that low breaks down, I'd still be looking for possible support down here. And this is my last-ditch effort. This is a 100% extension, so 2 equal legs down if this is corrective action, and the August low day close. So it's sort of a line in the sand for me. If 123, 129 holds support, again, wait for the rebound, look for the pullback. You want to buy that against the low and look to play the recovery. You know, wash out sub 123, I'm just not interested in touching it. You know, that type of scenario, you're likely to see this thing like really fall apart. As far as resistance is concerned, the major resistance threshold that you need to get through is still right here. Right here. 178. It's a swing low from a couple weeks back, but it's also a nice confluence of median lines. The longer dated median line for the broader structure off the daily chart, the median line of the ascending structure off the lows, basic trendline resistance off of the highs that you made for the month. Okay, and they all coincide right here. So this would necessitate a break of the weekly opening range, and for me, would be a breakout play here for dollar yen. Your initial target at the monthly open, and 154. 103.54. Matt Bussey, great to see you in the room, says, wait, Mike, just to clarify, the BOJ decision comes out tomorrow at 2:30 a.m. with the data being released a bit before. So, Matt, Kuroda is set to speak at 2:30 a.m. So I expect that the actual decision and the policy statement will come ahead of 2:30. Sometimes the tomorrow's, today's time zones get a bit confusing, LOL. I completely understand that. I hear you. I kind of just try to keep to U.S. trade timing sections here for the Eastern time, guys, and just kind of do the calculation for wherever you are in the world. But 2:30 a.m. in New York is when Kuroda is scheduled to speak. The policy decision should be released ahead of that. So, you know, any time after midnight here in New York is basically you're kind of on stand for the BOJ. He says, okay, thanks. All right, cheers, man. Any questions on the dollar yen setup, dollar yen levels, what the expectations are for tonight, or commentary from the BOJ? Again, you know, there's been a lot of talk as well. I've been talking with some fundy guys and some various desks here in the city, and not something I want to get into, guys, or kind of make as a point for our trading here. But there's also a lot of reluctancy or a lot of people that think there's going to be a reluctancy for the BOJ to do anything ahead of the elections just because of the threat that the different policies from these two candidates pose to the South Korean and the whole Korean peninsula. So that could have a bigger impact on what the BOJ kind of is willing to do in the now, whether they want to release a bazooka or kind of hold back a little bit to see what the outcome is going to be. Whether that's the case or not, I don't really care, right? I want to see what price action is doing. We're trading price action, and these levels are going to continue to be what guides us moving forward. All right, so that was dollar yen. Number 3, I do want to take a quick look at the last update from yesterday, and then I'll go over some more yen crosses, specifically Aussie yen, Kiwi yen, sterling yen, also been things I've been looking at, but ahead of the RBNZ. So the RBNZ is on tap shortly after the FOMC tomorrow. So we will do another update tomorrow. We'll get another opportunity to look at near-term price action for the Kiwi ahead of that release. But I just wanted to take a look because we're seeing a move today that's going to test the resolve of the downside bias. Excuse me. So as I noted in last night's sort of update, the focus remains lower while below this simple slope. Basic trendline support off the lows from July. You tagged it again here in late August. You tagged it again this month before making that outside day reversal that took you below that former trendline support. It acted as resistance for the next subsequent 3 days. Here we are again. Okay, a breach above 73.80 is what's needed to validate a reversal higher. It still could turn lower. I know that swing trades are sort of out of this at this point, but from my standpoint, you still could see a hold here. Here's what it looks like on the intraday now. Okay, there's that trendline support, clean pivot, resistance, resistance. I think on the daily chart, it might be extending off this line, in which case you're still kind of keeping that zone. Okay, but the long and short of it is this is a basic 50% retracement of the entire decline. I do want to see if this completes a 100 off the low. Yep. Wow. Sweet. All right. So you also have a 100% extension off the low at this point, right in this region. 2 equal legs up. Former trendline support. 50% retracement. That gives you a range resistance of 73.50 into 73.60. That's been the highs for the last few hours here. This is a 2-hour chart, by the way. I'm going to bring it to a 1 hour here just to give you a little bit closer of a time frame. So the long and short of it is I'm on the lookout. I'm not holding anything. Just as a disclaimer, the only trades I've taken so far this week was that short sterling with you guys on the webinar yesterday. Other than that, I'm kind of still just sitting pat. If you do take any positions over the next 24 hours, especially ahead of FOMC, just lower your leverage, give yourself a little bit more of a breathing room, and also be a little bit more, cherry picking, meticulous with your entries, okay? Because there's been a lot of whipsaw action. That being said, looking for a little bit more of an exhaustion trade here. Looking lower sub 73.60, 73.80, 73.90 is what's needed, like I said, to verify or to validate in my mind a little bit more of a breakout type of scenario for Kiwi Dollar. All right. Any questions on New Zealand? And again, that interest rate decision comes right after the Fed, literally a couple of hours. We're not expecting any changes. We've heard Wheeler say that the housing market is overheating and the issues that they're seeing there, concerns about overvaluation in the Kiwi, and that they stand pat or they stand ready to do more easing. And I think the markets, if you look at overnight index swaps, they are pricing in further easing, just not any time in the immediate future. So it's going to be more about the rhetoric from the RBNZ. And again, right after FOMC, that combo 1-2 punch could offer some volatility here. All right, questions on Kiwi Dollar? In fact, here's what the Kiwi Dollar looks like on the near term. Here's the 5-minute and here's the 1-minute. I did look just now real quick. I kind of just eyed out this, sorry about that, this basic trigger support right here, which would have put us in a short position a little bit Not too far off from where we are right now, but again, counter trend for the week so far. So we'll want to see if U.S. trade can get us back up there, maybe a better support trigger break into the U.S. Open. And remember, one thing we don't talk about enough in these webinars, guys, is timings of intraday positions. I know I've said it a lot in the past, but we want to try to keep these position entries early in the hours and early in the sessions. So the opening range for U.S. trade, the opening range for Asia trade, the opening range for London trade, these are your ideal times for entries. And also when we're looking to get into these entries, a lot of times I'll want to wait for the close of the hour and see how the opening range for the hour sets up. And sometimes that'll also help you kind of really nail down a better entry as you're opening up the sessions. Sushil says, are you saying 73.90 to go long? No, yeah, okay, I think you're misunderstanding. Sushil, I wouldn't say it like that. What I'm saying is 73.90 is the invalidation for the bearish trend. So if we break above 73.90, I would be looking higher. I wouldn't necessarily looking to buy the break right off the bat. I would still be looking for the pullback into that region again to buy it on a near-term intraday trade, right? You never want to try to jump into a long on a breakout scenario, guys. That's just, your stop is going to be way out of range, and you're going to, yep, Amir, hi Mike, hi everyone in the room. What's your view on pound yen? I was like, what's Lund yen? All right, got your typo there, pound yen. I will take a look at that in just a moment. Any questions on Kiwi here before we move off? Going once, going twice. Okay, Kiwi Dollar was number 4. Those were the 3 updates for last night's charts. Again, keep in mind on the intraday trade guys page, the Euro Dollar and Euro Aussie setup levels haven't changed from the previous session, so just keep that in mind as well. Here's what pound yen looks like, Amir, and we'll take a look at some other yen crosses as well. Pound yen is my favorite of the yen crosses. I am going to show you a couple of other ones that I've been kind of just tracking, but of my favored yen crosses, I think pound yen is one I'm most interested in. So if you guys recall from last week, the focus shifted lower with the break below or earlier in the month, the monthly open here. But I was looking for a support right here. And in fact, I was looking for I was hoping that we would get an exhaustion hold somewhere in this region to offer some long exposure. You can see where sort of the targets were of confluence. We pushed through it and closed the week below. And that changed things. So we opened up the week. We came right into that same region that we were looking for as support. It held as resistance, keeps the focus lower. We're now approaching structural support. Okay. And this median line structure that we've been following here, which caught the highs for the month, the lower parallel comes right into that region. If we take a look at the near-term charts, just lower, I don't know why it's not on here, is that 764 retracement, which takes you down as 131.30. So long story short, I'm looking to see if we can get some exhaustion here for the downside of pound yen. Again, a same scenario would be really cool if we get into the BOJ and you see some yen strength on a hold in policy from the BOJ may offer some sort of washout. Now, the major critical region of interest for me, let me just remove this here. Now I remember why I removed that, is because this is huge. Okay, the uncovered close from way back here, and from the 819 open of the week. By the way, does everyone know what I mean by uncovered close? Just means the market gapped higher, and we never moved in to fill that gap. So this is still an uncovered close from that weekly open. Okay, and the 2016 low day close comes in at 130.96. So I think this is going to be a critical region. Now, if you take a zoom out even more, basic trendline support off the 2011 low converges on that same region as we head into the BOJ. So this is huge. Definitely, or in my humble opinion, if you do see a break below this region, this thing could fall apart pretty quick. with the same respect, my favorite scenario is, again, you find some support here. On a rebound, you'd look for the pullback to buy against that low if we find some support in that key region. Amir says, Fed won't raise, hence a weaker dollar. BOJ probably won't move, hence stronger yen. This all supports fresh low. Just a thought. Amir, are you talking about dollar yen here with that question? Because we're looking at pound yen. But this is for pound yen. He is talking about pound yen. Okay, so this is what I want to say, Amir. The markets aren't expecting the Fed to move on rates. So I don't want to necessarily just say dollar weakness on that. We are bearish the dollar sub-resistance, right? But I'm not bearish the dollar because they're not going to raise rates. The expectation is that they're going to hold. So guys, always remember the market reaction is not just, oh, they raise or they do not. It's what the expectation is, and did they go with the expectation, or is it not against or was it against the expectation? So no one's expecting them to raise rates. The BOJ, no one's expecting anything either. They all want to see, but the market's pushing the yen strength story that we've seen across the board is essentially telling you that the markets are testing the BOJ's resolve, right? The markets are not expecting that the BOJ is going to be able to effectively move on policy, and therefore they're continuing to buy up the yen, which is, again, exactly what the BOJ does not want. They want yen weakness. So remember, the expectations aren't necessarily supporting that claim per se. For me, it's 131. Okay, it's 130.95, 130.82, this region here. If we break below it, I think this thing's going to fall apart. Okay, now there is a claim that you can make for these trend lines. I don't really want to stress them, and that would give you sort of an area of 129.40 as an area of possible interest, but this is still pretty critical for me on the near term. I agree with you, Matt. Matt says, Mike, if the BOJ says it's going to do more buying, isn't it kind of an empty threat? I read they've exhausted like 80% of their budget. It's not about it's an empty threat, Matt. It still would have, I think, a near-term impact on what price is doing. The longer-term implications that we're starting to see, the markets basically second-guessing the efficacy of what the BOJ is trying to do. Every time they've implemented new measures and the markets have not reacted, or they haven't seen the type of support, monetary support for the markets they've been looking for, they've leaned back on, well, it takes time for these measures to filter through into the real economy. Well, we still haven't seen that, right? So while me and you with a rational mind might say that is an empty threat, the markets are going to do what the market's going to do. The markets aren't always are very rarely rational, I should say. So you still could see that bid really slam the yen if they come out with some sort of bazooka measure again. Don't think that'll happen, but obviously with these central bank rate decisions, guys, it's all about kind of nonsense they come out with and the rhetoric that accompanies the statement. He says, ha, so still expect the market reaction. I mean, yeah, as the commentary comes out word by word, you're going to see some volatility. Whether that volatility changes any broader trends is still going to be based on the technicals, right? So watch 131, 130.96 as a major area of support for pound yen. All right, that was number 5. Any questions on pound yen? We're making good time. A quick look at some other yen crosses. Again, not stuff that I'm necessarily trading per se, guys, but I do want to just reflect on these as we get into the policy decisions. Here's what Aussie yen looks like. I just wanted to highlight critical support right down here. 75.76 into 75.90, an area of interest for major key support in my mind. Here's the Aussie yen longer term. If you trade off of daily charts sometimes, I feel like we would all just be much better. Just forget the whole the whole intraday deal, but some clarity here, right? This is why we need to have daily charts, and we always want to keep the broader trend in view. So Aussie yen's been respecting this longer term median line structure literally for the last 2 years, okay? This is the high from 2014. really nice pivots along median line resistance, median line support. The median line itself has been a very decent pivot in price, and right now that median line converges on a 618 retracement from the advance off the lows post-Brexit and the 618 extension from the decline off of those post-Brexit highs. So this region, for me, pretty darn important. Also, just ahead of that, you're looking at the low day close for the year, which was the Brexit low, and that comes in the close at 76.20. Okay, so huge region of support here for Aussie yen. If this breaks, okay, on yen strength or for Aussie weakness for that matter, which preferably not, but if it does, you'd see the first initial target would be down here into like 74.20, which would coincide with former trendline resistance, and that would be a play sort of like this. Okay, not my ideal scenario. My ideal scenario is one last washout, like I told you, on most of the yen crosses, and then a rebound. You'd need to get essentially above the monthly open here at 77.70 to validate some sort of reversal play here in Aussie yen. Here's what it looks like on the near term. Could have a little slope in play here off the lows. Don't have too much conviction on using that, but I did like how things lined up. And basically the way it lines up right now is the weekly open comes in line with the lower parallel. And if we take a near-term extension off the lows, whoop, that 100% comes in just higher at 77.23. So you can see it's kind of like a clean near-term play here. At least as far as the levels are concerned here for Aussie yen. Let me just see what this looks like. All right, so sort of the levels I'll be focused on for Aussie yen near term moving into the U.S. Open. By the way, for anyone who's new to the room, I see some fresh faces here, or some fresh names, I should say. That camera button, the top right-hand corner, feel free to click on that if you want to take a free shot or a screenshot of any of the charts that you see presented here. Any questions on Aussie yen? Comwall, we'll definitely look at dollar CAD and oil for sure. It's on the list. Okay, that was number 6. The last yen cross I would even consider is just Kiwi yen, and that's because been following the Kiwi. We talked about this possibly coming in some resistance. I'm looking for a pullback off this region, but with that in mind, here's what Kiwi yen looks like. And it's a little bit of a different story because it looks like we made a break of this near-term descending median line formation we've been following for a little bit over 2 weeks now. And so I do think you can still possibly find a little bit more of a run up towards the weekly open, towards a key fib, or this is the monthly open, excuse me, or a key fib confluence just higher at 75.05, 75.07, which might be a little bit stronger of a resistance. But in a scenario where you see, yen strength, I think this would be a nice downside play. Okay, if yen just falls apart, if dollar yen rather just falls apart, or you see the yen just rip face, right? This would be, I think, a nice candidate for the downside play in yen strength. So just something to keep in mind. Again, haven't operated on this setup. Probably, again, last on my list, pound yen and Aussie yen I think are much more appealing. But I just thought I'd present that to you to give you just some options here as you head into that release. All right. That is Kiwi yen number 7. Now let's jump into dollar CAD. And I hope I didn't miss any questions here. Euro Kiwi D. I will take a look at that. Again, I don't even have a chart up on that. So if we have time, I'll do some on the fly for that. But let me show you dollar CAD real quick. It's number 8. Loony, loony, loony. Back at resistance. This thing's like a ping pong match, right? It's just playing the levels like no one's business. So haven't really been too involved here, but here's the daily chart, and nothing's changed from last week on this. I'd remove this 618 at this point. I don't want to necessarily stress that. That's the only retracement, so let's just go ahead and Nullify that. This is the high day close from July. We'll still keep that in focus as near-term support. Near-term resistance is going to be right at the actual July stretch high, and that's backed closely by the 200-day moving average. So you're looking at 3250, 3255 here. You have that 200-day moving average, the stretch high, and that's kind of the barrier, a threshold of entry that you need to really get more concerted breakout. Subsequent targets are at 3295, which is just a swing high. The more important one is 3380, way up here. 2 equal legs off the low. So my problem with dollar CAD is, what do you want to do from here? Do you want to be buying again at multi-month highs, which I can, it's very hard for me to justify. As we noted last week, guys, in the scalp report, we were looking for a pullback and a long position off of 31, which is the monthly open, off of 3085, which would have completed a nice clean retracement. Didn't get it. This level has continued to hold a support, and this same level is now the weekly opening range low, 3138 or so, which is basically the opening range low for the week. So I'd be looking for a downside break of this ascending formation to give me an opportunity to get long. Interest for long levels remain unchanged. Monthly open at 31 and a basic 38.2 here at 30.85. But I can't, it's tough for me to get excited here, Conwall, about getting long dollar CAD at these levels. You know what I mean? Not to mention that we're still putting in some divergence here. Price action's at a higher high. I stand corrected. The divergence has been sort of uncoupled with this move here, but these last couple of highs, higher high in price, lower high in the oscillator. So I'm looking for an exhaustion pullback to get long on dollar CAD. So as it pertains to crude, Conwall, this is what I would sort of equate. The crude level is getting a little bit messy on the intraday chart. I'll show you that in a moment, but on the daily chart, not a darn thing has changed. Your initial resistance is still at the monthly open. Your key support at this point still hasn't changed at 42.90 into that slope support that we were following. A break there, clean cut target at 41.26, basically into 41, which is the 200-day moving average here for crude. The near-term chart looks like this. That's your monthly open. I was like, what is this trend line? This does not belong here. Okay. And bear with me one moment. Let me just see what this looks like. Stop traffic. New formation identified. All right. Right on. This is what I'd be working with, man. Oof, that is clean. So median line formation, if you just change that one that we were working with last week to use the low and the most recent high that we made back on the 8th, you could see that the median line actually caught the lows that we made there last week to the pip, and the rally finding resistance early this week right along the 50 line for the current operative slope. So watch for a break of this range. Okay, if we max the top side here above 44, I'd be looking for a rally back towards the upper parallel monthly open, 44.80, basically into 45. If we see a downside break, again, look to sell rallies. Your major initial support should be right around 41.77. And then again, that basic 618 takes you to 41.26 and that 200-day moving average. A little bit bigger on the daily chart here. Make sense, Conwall? Let me know if you have any other specific questions here on crude prices. Levels have been pretty good. I'd be sticking with this formation right now, or for now. Looks pretty clean. He says, yes, sir. Cheers. Ferris, great to see you. Says, hello, Mike. When you can, would you please look or go through Euro Oz? Sure can. Euro Oz we highlighted earlier in the week. Always down to take a look at how our puppy's doing. Here's Euro Oz. So the decline is coming into an interesting area of support. Here's what Euro Oz looks like on the daily chart. And the major area that we were looking at was the monthly open backed by the 50 line at the current operative slope off the lows here. And that's basically what we're trading at right now. Intraday, if you've been trying to trade this, it's been radical. You've been seeing a lot of wicks. As you saw, sort of a messy kind of probe through that 100% that we were looking for resistance last week. It actually held really nice into the close of the week with the pullback. We were looking for the decline into major key support. We broke below it, and it's offering resistance, but we're still holding some slope here. So I don't really know what to do from these levels. Ferris, he says, I'm considering it from the long side, and so am I. But I don't know if we want to do it from here or if there's one last drop in store. And there's a couple of things I'll just bring to your attention. Typically, when you're looking at these trends, classic Elliott wave gives you the fact that the third wave yes, so basically the third wave is typically going to be your strongest, your stretched out move. And when the market makes one huge kind of swoosh move like this, I kind of want to see a probe, one last probe at the low, or at least some divergence into a new low to try to fade it. That's all to say, sort of something like this, right? You made that stretch low. It was a really short-lived rebound. You tried to move this low again. Keep in mind, a move like this shakes out a lot of weak hands. People who were like, okay, great, I caught support. I'm going to put my stop right there. They just got clipped, and then the market reverses. So I'm watching for now, and bring this to a 1-hour chart, the weekly opening range. But I'm not necessarily, let me take that step back. What I'm focused on is this range right here, the monthly open, 148.37, and that support that we're basically trading into. Still going to stretch it down to 47.50 or so. So I'd love to see a move lower to get long. Basically, to validate some sort of breakout trade, we would need to get back above the reversal high day close, the median line here, way up into this region. A bigger ATR, so definitely the daily ranges could blow out nicely here. But for now, I'm kind of keeping this on the sidelines. I want to be long, but maybe a move down lower first, which is why I haven't really highlighted it over the last 24 hours, Ferris. I'm kind of just tracking this one for now. On its face, you're at support. The 50 line caught the upper side of the rallies for the last 2 months. So here's the 50 line, could catch support. Again, near-term resistance at 2016 open, 2016 low day close, both of which are in this major critical range here. Ferris, does that help on Euro Oz? Wish I had a little bit more conviction on this one, but for now, I think you want to just kind of let this weekly opening range pan out. He says, understood. Thank you. D, Euro Kiwi, coming right up. Coming right up. Let's see what Euro Key looks like. All right. And again, I haven't looked at this in weeks, D, so just bear with me. I'm going to just go right off the fly here for you. Okay, don't need that. Okay, this is going to look ugly, but again, just bear with me. Okay, so you're coming into basic Fibonacci support at the advance off the yearly low. So that's something to look at right off the bat at 52.12, 52.13 here. Near-term support, possible play. Just go ahead and copy that retracement. Go ahead and throw on this formation. And we'll throw that slope in the mix too. Now on the hourly chart, let's see if we get any juice here. Okay, so one thing that points out is that this looks like, and you always want to be able to readily identify your Elliott wave patterns. Again, I'm not a huge Elliottian. You know that Jamie also really bigger in Elliott than I am. Obviously, he's been using that for a little bit longer. But just looking at this objectively, your classic wave count kind of points out to you on this advance with a 1, 2, 3, which is again the strongest, largest wave, 4, 5. And within the confines of wave 3, you even have a 1, 2, 3, 4, 5. So it looks like it could be a nice little bottoming process that's coming underway. You see that momentum did make divergence on the last couple of monthly lows. Here's your July low, and then here's your low from this month. A lower low in price, a higher low in the oscillator. Both those reference points below 30, so a weak signal, but a signal nonetheless. I'd be looking for exhaustion and for interest on the long side. Now, the one caveat is, again, I just want to warn you that we do have, like I said, that RBNZ release on tap. Clean this up. And your weekly open comes in at 53.50. Monthly open, more important, is what I'd focus on, 53.80 as a sort of your initial targets on a breakout of this near-term descending channel. So possible washout towards 51.40 for a long exposure, but the long and short of it is I'd be looking to buy a dip towards that, structural support if this is going to be the play in hand here. D, does that help on Euro Key? Is that sort of the idea you're working with? I didn't even know if you were bullish or bearish, but that's on a basic, quick interpretation of price action. Again, I've just checked this out for the last 10 minutes. Whatever the low ends up being, I think that we still have a bottoming process that's underway, largely speaking. D says, thanks, I am short of a 155.20. Oh, nice. And now stop at 153.60 and was targeting 149.95, but I think we'll book profits at current levels, 152.20. Excellent entry on that trade. I love your entry. This was very helpful for me. Thanks. Yeah, you're more than welcome, D. You're in the right place. I would be cautious definitely at that 618. One other thing I like to do in my personal trading, D, is, again, I don't know what your risk tolerance is or how you're trading this, but leave something on the table sometimes. On a lot of these positions, I will get out on the bulk of the move. So every time we hit a quarter of the daily ATR, I'll shave off some, bring my stops to break even or better, and so forth. If you still have conviction on it, I don't want to shake you out, but I do want to highlight that 618 comes in here, the swing lows from last month, and the actual last month's low comes in here, and then you have that major key support just lower at 51.40. So, just keep that in mind. If it's worth it, or if you have a larger position on, it might be worth it just to leave a little sliver to see if you get that decline. That said, you are at initial support. All right. Joel says, could we please have a brief look at gold too. I just want your ideas of what you see happening there. Yeah, absolutely, Joel. D says, thanks, was looking where the 618 was, and I will take it off the table. Many thanks. Hey, D, more than welcome. Always great seeing the webinar. Joel, here's what gold looks like. Let me just write this down. Euro Kiwi was number 10. Trying to keep the order for you. And gold will be 11. Here's what gold looks like. Should be actually a decent reactor central bank policy. Remember your basic historical movers on gold is going to be hedges against inflation and market risk. So inflation, the global central banks are essentially trying to stoke inflation, right? The opposite of it. So gold's not getting that bid. As far as a turnover and risk, we're seeing more volatility, not necessarily a major market sell-off just yet. Technically, Joel, gold is a bull market on a longer-term approach, in my humble opinion. Near term, we're basically trying to gauge whether we're going to see the correction go lower or not. The last threshold for me would be 1287. That's my bullish invalidation level. Near-term support is basically just right here, a little bit lower, 1303. Okay, you have the 100-day moving average, the 100% extension of the decline off the high, so 2 equal legs down, basic trendline support or parallel support off of the lows from last year, specifically in December, and they all line up in this region at 1303, 1305. If that gives out a basic 50 of the advance off the lows that you made in May coincides with the lower parallel here, and that takes you to 1287. Okay, below that, I think you lose all sorts of structural support, and you risk a much steeper setback. For me, I'm looking for an exhaustion low at this level, or on a washout. Since we have central bank policy coming up, I can't really limit myself to such a tight range. On a drop here, I'd be interested in possibly looking for another sort of exhaustion move in gold. All right. Don't forget, guys, like I always want to just emphasize, this is trendline resistance off of the all-time record highs in 2011. So it's inherent, that you'll see some kickback off this region. I think that's what's been happening for the last couple of months. But the broader advance, we're in the trend until we're not. We're basically coming up on some pretty big major confluence support here. All right. Joel, does that help? He says, thanks, Aaron, more than welcome. Michael, you went through plenty of pairs. Well, it's my job. My pleasure, guys. That was gold. We went through crude first, actually. Let me just add that in. And that takes us through all your questions, I think. Any other questions I may have missed, do let me know. Oh, euro dollar. Eileen, quick look at euro dollar. Yeah. So look, the trade is kind of like teetering out, but here's the thing. I don't know what to say. No, this is what I want to say. I think I want to leave a little bit more of a possibility for a wash lower. I like the way the week advanced, guys. We came into the monthly open and we ripped right off it. Even on a secondary attempt here, we ripped right off it. But this is still the level that we talked about early in the week as near-term resistance. You saw an overnight, we ran right into it and reversed sharply off. Now it converges with former basic trendline support heading into the basically Asia session tonight. And now it's, more or less on a closed basis, the weekly opening range low, last week's initial to this week's opening range high, last week's opening range low. So if we do get a breach above that, look at for targets at 1230 and more importantly, 1255, 1260 here, the high day close. But this is still sort of the breakout I would need to validate the resumption of the broader uptrend I think you see in euro dollar. Below 1255, I still think that there's so much stacked up here at 110.85, guys. It's not even funny. A 618 retracement, 100% extension, even the near-term extension just off the most recent decline. You have basic trendline support coming into that region as well. There's so much lined up there. Might be too much to ask to see that dollar strength rip into that region, but that's sort of my ideal scenario. That's this right here for euro dollar. So it's messy at best. Again, I try not to point you into the pairs that are quite this choppy. I'll highlight this, I think, when we get closer to. Obviously, we'll go over all the dollar crosses tomorrow again ahead of the FOMC. But ahead of the FOMC, guys, I think there's just more juice for your dollar somewhere else than with the euro right now. Matt, I just saw your comment. It says, hope you don't get yelled out over gold. Yeah. Well, I mean, haters gonna hate. Yeah. What can I tell you? All right, guys. So if there are no other questions, that's the open of the U.S. Markets online right now. We'll go ahead and wrap things up. Keep in mind, we pushed back Jamie's midweek strategy webinar till Thursday so we can get a nice reaction to the FOMC, and he'll be on board with the midweek strategy webinar on Thursday to cover the aftermath. Scalp webinars, intraday scalp webinars remain unchanged each morning at 8:30. So I'll see you guys bright and early tomorrow morning. We'll give you a nice recap and certainly a preview to what we should be expecting from tomorrow's big central rate decision. Watch the BOJ tonight. Again, Kuroda expected to speak at 2:30 a.m. Best of luck trading. See you tomorrow. Cheers.